By the way, the mid-cap market is now getting, now seeing more correction, 1% down on the index. Sun TV is giving some signs of deja vu. The stock opened about 5-6% higher, but after that has been selling on that stock. So last quarter also it had happened. The earnings day was the top.
Yeah.
That happens with a lot of companies. Look at Apollo Hospitals. After opening 3 or 4% higher, that's now 2% in the red. Just pull out Apollo Hospitals. On the other hand, Balkrishna Industries is now at the high point of the day. And that's, of course, it looked like the weakest set of numbers, right? Yeah. But the stocks are 5% now on Balkrishna Industries. That's the market position.
Over 1,200 stocks now on the declining side. So if you get the market breadth graph on the screen, you'll see that it's been worsening since the time we started trade. Now 1:3 almost in favor of declines. But one company that posted a good set of numbers was Thermax. Good earnings in the third quarter. You had strong top-line growth. MS Unikrishnan, the MD of the company, joins us now. Mr. Unikrishnan, good morning and thanks for joining us. It was a revenue growth of almost 29% that you saw this time around. How has the demand situation been, and can this revenue run rate sustain?
Certainly, with the carry forward orders in the order book of the company also having risen to 6,500 crore almost, highest ever that you've seen. You should certainly see growth continuing for at least a couple of more quarters to go ahead. More importantly for me is in terms of the order intake. In a very depressed domestic and international market, we've been able to improve our order intake by 5% in comparison to the same quarter last year. It's almost 1,480 crore. That's a very heartening thing. And the international markets have certainly contributed by improving the order intake by 30%, though the domestic has slightly come down. So for a capital goods company, the orders incoming is more important than the revenue. Revenue is an indication of our ability to execute orders flawlessly, which has also happened by registering a 29% growth in overall revenues for the quarter. That's about the results. A fairly good quarter for the company.
Mr. Unikrishnan, good morning, sir. So this order book improvement that's happening, these new orders that you clocked in, how much of that is domestic? How much is international? You also took a one-time charge, and I think that was with respect to the international business. Is there any concern sort of building up there?
The order intake, as you asked, Sonia, is it has gone up by 65% in the international market. A good part of that improvement happening from Southeast Asian market and the spread of the rest of the world also. And these are standard products for the company in heating, in cooling, in captive power. All this kind of orders from most of the Southeast Asian countries have helped us. There had been also orders coming in from the African continent in the current quarter. So generally the international order booking had been better. Now coming to the impairment that you've seen, it's a goodwill impairment. It is not a real asset impairment. While we had bought over Danstock a few years back, there was a goodwill remaining on the balance sheet of the company, which we felt is the right time to be impairing because in our opinion, goodwill being carried for continuous period for a longer period may not be the right thing for a company like Thermax. So in the current year, we also had some other impairment reversal happening of another company. We took it as an opportunity to be impairing. Otherwise, there is nothing that you need to be concerned about. Though, since you mentioned about, yes, the specific Danstocker subsidiary of ours has incurred losses in the current quarter, but that will turn around going forward. Maybe in the next 2 quarters, it should be back into profitability. So there is nothing to worry or concern on that particular account.
Okay, so since there is a pickup that you're seeing, and you did mention about 1,500 crores of order intake in Q3, what's the outlook like for FY20? What are the initial signs suggesting? And what's the order pipeline looking like over the next 1 year now?
We have inquiry pipeline quite healthy both in the domestic and international market for the standard products, medium-sized projects also. However, for the very large-sized projects, inquiries are not so high, though we are expecting 3 more refinery expansions where in India, within the country, where inquiries are almost on the verge of coming into the market. So, H2 of next year, you should see 3 refinery projects getting concluded. We are expecting captive power and waste heat recovery based power plants to go very high in cement industry in the current quarter, next few quarters also. So there may be isolated projects available in the market, but on a generic basis, domestic market may not be very buoyant next year. Being present in the international markets as much as we are in India, we are expecting to compensate part of this negative of the Indian market with the international markets to help us. So I'm expecting a betterment of the order intake, though not in a substantial way in the coming year. If at all, if I'm able to continue the run rate at 1,500 crore per quarter, that should be a good and healthy order intake for the company, even the FY20.
So, okay, we get your point on the top line. What about margins, sir? Because the street was hoping that you'd actually expand margins in the quarter gone by, but there's been a compression. So what is happening on this front?
Well, we are operating in a buyer's market with a limited number of orders to be concluded, not a buoyancy in the market prevailing. And many of my competition reeling under pressure related to operations itself. In such a situation, improvement of margins are not a very easy task. I would want to say that last year's orders which you picked up were also picked up in very, very competitive circumstances. So maintaining the margin itself was a bit difficulty. If not for the losses in one subsidiary in the international market, our margins wouldn't have contracted, because that one subsidiary loss in the quarter is just about the negative 80 basis point contraction in the margins that we suffered. But that's a quarterly affair. I don't think anything need to be worrisome going forward on that count.
Okay. You know, the last time we spoke to you, and in fact to a lot of the industry veterans, they told us that private capex has not picked up just yet. It's only government-related capex that continues to boost orders. Any signs of a pickup in private capex at all? And what's the outlook like now for the next 12 months?
Private capex is not negative at all, the way people are projecting it to be. I would want to divide the private capex into two sectors. One is where it is totally consumer facing, where irrespective of whichever is the government going to be coming and going in the country, consumption is going to be continuing, like beverages, alcohol, textiles, food processing, automobiles, light engineering. These segments are continuing to be investing, but only caveat over there is the size of the projects in those kind of segments are 500 crore, 600 crore, 800 crore. In that, the order value for a company like Thermax may be limited to 50 lakhs to maybe a 5 crore. So those projects are continuing unabatedly, and there is no constraint at all in that area. The private capex which people are talking in the wire is more related to the larger size, a steel plant of maybe a $2 billion investment, or maybe fertilizer expansion in the private industry worth maybe $1 billion, or a thermal power plant which is going to be worth maybe $2 or $3 billion. They're not happening, nor are they expected to be happening also.
All right.
So let's always have the clarity. Private capex is happening in the country, but not in the big size, big ticket size.
All right, Mr. Unnikrishnan, thanks a lot for your time today. That's Thermax. By the way, the stock that's now seeing a big decline is Indigo. Just pull out that stock intraday. Now, there's been some problem with Indigo over the last 2 or 3 days in terms of pilot shortage. Yesterday, I think there were some flights which were cancelled. I think yesterday there was 75 flights which got cancelled over the weekend. I think 32 more flights have been cancelled today. Now, the airline, of course, gave the reason about the weather, but the issue is about clearly pilot shortage, and that's something which is a material impact on the company, and that's why you're seeing this decline on the stock. It's down 2.5% right now. Sonia, you've tracked the sector, of course. So
yes,
there's a lot of cancellations which are happening at Indigo because of pilot shortage.
You were mentioning this earlier as well, Anuj. I was just reading one of the reports. It says that Indigo needs at least 100 captains immediately for a proper flight schedule. There's a 30% shortage in pilots, and that has been going on for the last 6 months. Also, the airline's pilots are put under tremendous pressure to work extra hours. Now, it's not just a case with Indigo, right? Other companies are also facing it, the likes of Jet, etc. But the fact that they have said that it was weather shortage because of which the flights were being cancelled, I mean, that is something that just puts credibility.
Exactly, and I think that's the reason you're seeing a bit of a decline in the stock. We'll take a break. Up next, fresh technical trades lined up with Ashwini, Mitesh and Prakash Kaba.